Hi there, everybody. Welcome back. This is Kevin Smith here in First Team Real Estate here in Southern California. Today, I wanted to touch on a topic that affects quite a bit of Californians, and that is inheriting a property. So nearly 18% of California estate transactions are through inheritance. So that's nearly 3 times the national average. This brings up a couple of points that I wanted to touch on today. The first one is inheriting the property that hasn't been already put into a trust. So the first thing you're going to want to do, if you haven't done this already, is talk to your family member or the person that you'll be inheriting the property, and to make sure that they have talked to a trust attorney so that they can have the property already established with different ownership and that they've put it in the trust correctly, that every grant deed, everything has already been transferred over, so that the last thing you want to do is to go through probate. Probate's when you're not having your properties that have already been set aside into your trusts. That has to go through a court system. This can really mess up a lot of people because it takes quite a while to get through the court system, and you may have somebody that may be making decisions for the family or the person who's passed away that isn't really going to be in the best benefit of you or the other family members that are inheriting the property. One of the other big things is always taxes. So here in California, we have Prop 13, which was originally set up several decades ago, and that set the property tax rate for the property value at the time of purchase, and that it could only go up a certain amount. So let's just say an example of a property that was originally purchased for $200,000 and our property taxes are approximately 1%. That would be about $2,000 a year for property taxes in California. Now the person dies, that property has now appreciated to the staggering amount of $2 million. The new inheritants are not going to be able to keep that same tax rate that the deceased had. So it's going to be reevaluated at that $2 million value, and that at 1% of $2 million is now $20,000. So as you can imagine, taxes are going to immediately jump, and for those who are inheriting these properties, there's reasons why they may not want to keep this property. It doesn't cash flow enough, it's too much work, it's too much money, there's not set aside enough funds to keep the property, so they end up having to sell it. Another reason why preparing before death is much more advantageous for those who are inheriting it. Now, some of the things that are coming up, and now I have a client that's in the process of putting their family member into hospice, is do the heirs actually want the property? Do they want to keep it? Are there siblings? One wants to keep it, the other one does not. So some of the things that may come up is the actual property maintenance. If the property hasn't been taken care of, there could be quite a bit of maintenance that needs to be done for somebody to actually inhabit the property, or to get it ready for sale, or to get it ready to rent. So look in your properties and check out the maintenance. Be quite honest about the properties on the market now and making sure that they're up to par as far as having to rent them to get the highest amount of income. Or if you are going to sell it, making sure that it's been cleaned and painted and ready to go for a realtor to sell it. Another reason that they may not want to keep the property is a lot of heirs may not even live in the location. So if the property is, say, in California, but all of the siblings, the children are all in different states, they may now want the property. They don't want to manage it from long distance. They just want to get the money and move on to different investments. So that's an option. So those are types of things that need to be discussed before with the other siblings or the beneficiary or the person that's going to be the executive to the trust or the property itself. Another reason that people may not want to keep the property is because of the legality of being a landlord or a homeowner after receiving the property. The regulations and the evictions and the cost of being a landlord in California can be extremely overwhelming. A lot of laws and rules that you must follow that are coming about every single year. So heirs may not want the property for those types of reasons. And so they don't want to have anything to do with landlords and being a property management with tenants and maintenance and those types of expenses in California. And one of the final other reasons you may want to sell the property is all the family members need or want the cash value of the property. So again, making sure that these wishes are facilitated through your beneficiary or the executor to the estate. Having this done prior will alleviate a lot of issues, a lot of fighting, and possibly lawyers and things like that. So if you guys can get this all figured out beforehand, figure out if a sibling wants to keep it or doesn't want to keep it, and then figuring out getting getting an appraisal of the property, knowing what the value is so that you can do some type of a buyout or move on so those properties can be taxed and then the proceeds can be used to invest in other states or cities around the country. So these are some of the hottest tips to keep in mind when you're getting ready for a property to be inherited. Making sure that you're doing these steps beforehand will make it a lot easier for the whole family. Talking to your trusted estate planners, your probate attorneys, CPAs, tax people, and then also a trusted realtor in the area. If you need more help with this, feel free to reach out to me either by phone, text, or email. I hope this helps, and we look forward to speaking to you all again next week. Take care. Bye-bye.